Hello and welcome to Car Dealer Live. My name is James Batchelor. Thank you very much for joining us. Today we're speaking to Head of Valuations at Cap HPI, Derren Martin. Hello, Derren.
Hi there.
Pleasure to have you on as always. You're very generous with your time with us, so thank you very much for
It's
that.
a pleasure.
Let's just kick things straight off, really. So the last time we spoke to you, you said you hadn't moved prices for cars below 5 years. Just remind us again the decision for that.
Yeah, so we didn't move. We didn't move a value at all for 6 weeks after lockdown. Then from the 11th of May, we started moving values again, but only under 5 years old. Sorry, over 5 years old. That was mainly because that's where most of the data was. We didn't have the faith in the data under 5 years old that there was enough of it, or that it was representative of the market. So we only we made that decision on the 11th of around the 11th of May to start moving values again. At that point in time, volumes were about 17% of normal in the market. So most of that being older, we made that decision that those were the values we were comfortable with moving. And we started moving values under 5 years old a couple of weeks after that.
Okay. And so what have you been seeing in the past couple of weeks, especially since dealers have opened on June the 1st?
Yeah, so we've seen, well, at the start of lockdown, values were very, very weak, but on very, very low volumes. We've seen a steady increase through then. We always look at the measure, or the industry measures to a percentage of cap. And normally percentage of cap is around 94-95% because some of the vehicles are more heavily damaged. So we would expect that to be the normal figure. And at the moment, values are around 99% of cap in the market. So prices are strong. We've seen that increase since the car showrooms reopened on the 1st. And a lot of the values that we're now analysing in our live products, we're moving them up, which is really, really good for the industry, that values have held firm. There's good demand out there from consumers, bit of pent up demand, we feel, and that has obviously meant that some of the buyers are out there buying cars from the auctions and other remarketers. So pretty positive. Younger used cars, not quite so positive, and we have dropped some values there, but it's only on the real young stuff, and that's not the drops there are not very big. They're around 1 or 2%, and that could well recover as well.
Are you surprised by the level of demand so far?
I think it's taken a lot of people by surprise. Yeah, we if we hold our hands up, we probably thought that values would drop before they improved, but they've improved straight away. And yeah, but I do think we're in a bit of a bubble where the pent up demand from people who haven't bought for 2 or 3 months and have been looking to buy during that time, and people that are wary of public transport, that's not going to continue forever, either of those two reasons for buying. So there's a bit of a pent up demand out there at the moment. It did take us a little bit by surprise how strong things were, and but long may it continue. But I think we are in a bit of a temporary bubble, and there's likely to be probably more of an economic downturn, and people are still furloughed. People haven't necessarily lost their jobs who may unfortunately lose their jobs, and then when consumer confidence goes, there could be some more issues. But at the moment, certainly reasons to be positive. The auctions are all opening either online, or some of them are opening next week for physical auctions, being very, very careful. But there are good opportunities to buy.
Mm-hmm. On average, what would you say values have sort of really gone up by? Is that something you can put a figure on?
Yeah, it depends. It varies quite a lot because of the way we work. We're looking at everything in isolation. So we look at the individual models in isolation. But it varies from 2, 3, 4% up. The older stuff is faring a lot better. When you look at that, so no one buys a car in percentages. You look at pound note terms. Generally, it's around £150. So, but that's unusual for the time of year, and especially unusual considering that we didn't move any values for a couple of months. So we were expecting it to catch up. This time last year, values dropped quite considerably over the summer months. So it is quite unusual for it to be happening. Obviously, we're in very unusual times though. So
yeah,
but yeah, it's those are the sorts of figures. I would say on average it's around £150 up. But you've got some German premium cars that are older that are performing quite well. You've got smaller city cars that are performing quite well, and I guess it makes sense for those sorts of vehicles, because people are either downsizing from a more expensive car, or perhaps buying a car for the first time to avoid public transport. So it's that cheaper end that is really strong.
I suppose that sort of answers my next question, really, which was what are the big movers at the moment? So it's the German premium stuff, as you'd expect, and people downsizing into smaller cars.
Yeah, I mean, we've been speaking to a lot of dealers around this time as well, and they're definitely seeing those sorts of trends. Car supermarkets, I would expect, to be doing well, because they do tend to deal in cars sort of around that 5-year-old and over. So yeah, it's older cars, it's smaller cars. It doesn't seem to be much difference in fuel type. So petrol, diesel, they're both selling pretty well. Electric vehicles are a little bit more expensive, so probably not quite so. Not quite so much demand for those at the moment, but that's not because it's the fuel type. It's just that they are a slightly more expensive vehicle because they tend to be newer. So it's across the board on the older range. But I think people have definitely come out of younger used cars that they may have bought for a reasonable sum, selling it for less, but then buying a car for a lot less. So overall, they have some money in the bank. So there's that theme as well. So yeah, generally, it's all positive from that perspective.
Mm. And possibly a difficult question to answer, but what do you think your view is for the rest of the year? Do you think it's still going to be surprisingly positive, or should we be braced for some bad news?
It's a really difficult one. I mean, we're obviously the experts at Cap HPI, but we've never been in this situation before. I certainly don't think it's all bad news. I do think that we're in a bit of a temporary bubble, as I say, of pent-up demand. There's also supply issues at the moment, so all the supply lines aren't open. Transport companies are at lower capacity. Car showrooms are also at lower capacity, though, but I do think there's a bit of a bottleneck with transport, which meant demand at the moment is outweighing supply. When that supply catches up, then the values will drop. That is a fact of life, really, that cars, as they get older in their life cycle, are worth less than they were previously. So there will be some pressure on pricing later on this year, but it's not going to be particularly untoward. It will be heavier than we would probably normally expect, we think, because of economic downturn, consumers being more prudent with their money. But it's not going to be anywhere near as bad as it could have been, or anywhere near as bad as it was in sort of 2008, 2009, which is an obvious comparison to make. Yeah. So I think prices will stay strong for a period, I would say, throughout June. I think after that you may see a little bit of a drop off, and unfortunately people are going to lose their livelihoods over sort of the period where furlough comes to an end. Then that could be a bit of pressure there as well. You've also got extensions to PCPs that have been made, so those cars aren't returning at the moment. They will all come back at some point. They will start coming back later on in the year, but there will be more pressure on supply then, and the big unknown is demand, really. But when in economic downturns, used cars do tend to be quite robust, and people may stop buying a new car and going into a used car, so there could be some positivity there.
Yeah. Do you think we could get to a stage where we've got oversupply? Because they're like you were saying, PCP cars are coming back, but there aren't quite enough buyers for those cars.
I'm not sure they'll get oversupply. There will be a bit more pressure on price because of that, but there won't be a huge glut of vehicles. There will be the vehicles will come back fairly steadily. We're seeing some very responsible activity from remarketers, from the leasing companies and the rental companies who are not or taking advantage of the current demand, although it's difficult to do that anyway with the transport networks. But I don't think you'll get a huge oversupply. And obviously, factories have been closed for a period of time and are only starting up again at lower capacity. So there will be a shortage of new cars from that as well. But I think younger used cars will be under a little bit more pressure because there are still stocks from March. The timing of lockdown in March meant that a lot of cars were already built but weren't registered towards the end of the month. So they're either unregistered or they're registered but without a home. So there will be a bit of pressure on younger used cars going forward, and we're seeing that now. Some of those values are dropping more than so the older ones are going up, and some of the younger ones are dropping. So you're getting a bit of a compression of values there by age.
Yeah, yeah. Do you think 2020 could be a golden year for used cars? Could it be, could it be a terrible year for new cars, and yet used cars, they could actually be the saviour for many dealers?
I think used cars are the bread and butter for the dealers anyway. That's where they rely on, and they can make their margin, and they're less reliant on incentives from the manufacturers. I think it could still be a good year. We were actually predicting it would have been a very good year without the unfortunate COVID-19 happening. So I think it will still be a reasonable year, and a lot of the dealer groups will be definitely relying on used cars for their to achieve their margins. And obviously you've got the independents and the car supermarkets as well. So, and as I say, in economic downturns, people do move towards used cars, and maybe even for a sort of a second or third car, or people coming out who do lose a job, lose a company car, or take a cash allowance rather than a company car. They could well be looking to buy a used car.
Before COVID-19, you've just said that the indications were it's going to be a very, very good year. I mean, what were those indications?
Well, it was a very strong market. We actually put values up in both January and February, and for the first half of March they were fairly strong as well. And we actually thought the prices would hold fairly firm throughout the year. And so the indications were strong at the time, and we thought that there would be healthy demand matching supply. And when that happens, the prices hold up a lot better. It's only when that dynamic changes. So yeah, it was all looking very positive, but unfortunately, now feels like a long time ago when we were talking that the values were going up. But yeah, putting values up in both January and February was very unusual. And what that's meant is that valuation drops even now, with what's happened, have been very minor throughout the whole year. Really, it has been quite robust, and during that lockdown period, prices held up. So it has been quite a robust market so far.
Yeah, I think January feels about 5 years ago now, doesn't it? It seems an awful long time ago.
Yeah.
Just finally, I hear you're launching a new appraisal app for dealers and consumers. How's that going?
Yeah, so that's being trialled at the moment, and so the way that works is the consumer can put their registration number in, returns all the vehicle details. They then go around and appraise their car, send it through. They take photos, mark any damage down. They then download that to the dealer's website, and they can then value their part exchange without actually having to meet. And this is what we feel that people are looking at less sort of human contact than they would have done in the past. So we feel this works both ways, and the dealers can then return the valuation and mark what they feel the damage is and how much that car's worth. So that's being trialled by a big dealer group at the moment, and it's sort of ready to go. So yeah, that's a real positive for the industry. We were already developing that, but that's one of the things we've accelerated during this time. We've been very keen to help out dealers during this period, not just with that appraisal app, but by data that we've been seeing and by the conversations that we've been having, and sort of explaining what we're seing in the market, and sort of saying, hold your nerve, don't reduce your advertised prices, that sort of thing. We've not been the only ones saying that. There's been a lot of market movement. We've been talking at a high level to the dealer groups to try and sort of maintain some dialogue really, and give a bit of faith that the market is still operating, and that things are sort of well and good despite what the wider economy is showing.
Yeah. I do think the coronavirus really has been an accelerant for many things in our industry, hasn't it? You would think everything would slow down, but for many things, such as you've just described, it's sped them up, if anything.
Yeah, the online capabilities of the auctions, they I guess initially it's not something that certainly the smaller ones were doing too much of. Now they are. The online capabilities of the car dealers, that I think initially they realised they couldn't move volumes, move cars in great volumes, do that. So that's definitely increased. It was probably already coming, but it's certainly accelerated that, and it's been good to sort of see how that. I mean, it's just this way of working as well, and it just means that people have got used to things very quickly. And I think really by way of sort of the remarketing industry, it has kept things going. And what it meant, if an auction can sell a car for somebody, it means that somebody is getting some cash in the bank. So it's very important that kept going all the way through.
Yeah. Thank you, Derren. That was a pleasure talking to you as always. Some very interesting stuff there for dealers. Thank you very much indeed. If you want to get involved with live broadcasts such as this, just get involved. Just send me a message, james.batchelor@blackballmedia.co.uk. or email James Baggett, james@blackballmedia.co.uk. Thanks again to Derren for taking his time out today, and thank you very much for watching. Bye-bye.